Hello, young traders. USDJPY here from Drfx, Swing Trading Mentoring. I'm going to be taking a look at a few currency pairs that could be providing us with trading setups during the next couple of days, as many of them get ready to continue their breakouts from their respective large consolidation setups on their larger time frames. Of course, all of this is done within the context of these 8 steps, which allow us to be able to identify exactly what is taking place in the currency market and on the currency pairs that we're looking at, and avoid many of the market traps that are set, and identify trading opportunities that can be profitable and allow us to capture a strong trading gain. Now, starting off the analysis today is the pound Aussie dollar, which appears to be in the process of forming 2 types of consolidations: a larger one on the daily chart as well as a smaller short-term one on the 4-hour chart. Here you see what I think could be the formation of a consolidation set up on the daily chart. This could take the form of a range with a horizontal support and resistance boundary. And as you can see here, right now the market has recently U-turned with a bullish signal at support, indicating the possibility of a start of a rally, and which would take us towards this area here, as it would form a second bullish wave, followed by a U-turn that would take place somewhere in this region to form a second bearish wave that would take us back down to support and complete the formation of this large consolidation. However, in the short term, before that takes place, what is also possible is that based on the pullback that has taken place on a 4-hour chart, after the market rallied in response to hitting this major support point, we could see the market form a consolidation setup as well. And this could take place if the market were to rally a little higher here and then U-turn with a strong signal to indicate the start of a small downtrend. So I've had a strong uptrend so far with these types of candles, and these are the types of candles that are typically what you see when the market is forming a consolidation. Slow, small, but steady. And this is especially so after the market has reached a major turning point in the form of a major support or resistance price point. So given that we have hit such an area on the daily chart, we could see the market, in fact, we could therefore see the market form a consolidation in this area here over the next couple of days as a shorter movement before the market actually starts its continues the formation of this larger setup. So going to be waiting until the market rallies a little bit and then U-turns and then provides us with a strong signal to indicate the start of a bearish movement. Euro US dollar. This one also looks to be forming a consolidation setup on its daily chart. And what could be taking place now is that the breakout that has taken place from the consolidation setup on the daily chart, a smaller consolidation setup, appears to be the right tip of a large bear crown setup or head and shoulders pattern that is going to continue the movement that forms that larger consolidation setup. So here you see that based on the waves on the daily chart that have been formed and the break of these 2 uptrend lines, which you will see in more detail, or in a little bit more detail in a little while. If based on this rally that has taken place, the sharp uptrend and what appears to be a sharp start of a sharp downtrend, the market could be forming a consolidation setup on this currency pair on this time frame over the next couple of months. So as you'll see from the manual, whenever the market has these types of sharp and aggressive bullish waves followed by an equally sharp bearish wave, or vice versa, depending on which direction the market has started it, these types of sharp waves normally tell us that the market is going to be forming a consolidation. So there's a very high chance that we will see this type of pattern of movement continuing with additional sharp bullish and bearish waves until a consolidation setup has been completed. Now, in terms of what could be leading to the formation of this setup, here you can see what appears to be the possible bear crown setup, with this area here on the left hand side representing the left tip that was formed as part of the previous uptrend, and this consolidation setup represents the head or the center tip of the crown, and this was followed by the breakout that took us towards the outer uptrend line, where it then moved sideways in response to hitting this major outer uptrend line, which is acting as support, and it essentially created this consolidation setup that we would refer to as the right tip or the right shoulder of the setup. And what will be taking place is that the market, as you can see, the market has already started to break out from this setup, which is basically completing the formation of this or responding to this bear count setup to indicate the start or the continuation of this downtrend in favor of the US dollar as part of the formation of this large setup. Here you can see the example of head and shoulders pattern from the manual, where basically what happens is that the market will have a trend moving in one direction, in this case an uptrend, and then it would form one last setup as part of that trend, and then continue the movement in that existing trend direction, and then U-turn to start a reversal that would break trend lines that have been formed along the way. It would then move into the buy zone below these uptrend lines and then form a setup, which was this, such as this area here, that would form the right tip, and then the breakout from that right tip would indicate the start of the new trend direction. So this is what is taking place on this currency pair. Left tip, center tip, right tip. Right tip now being broken, recently being broken, as you can see here more closely. Support broken, and this is telling us that the market is going to be responding to this bear crown setup and continuing the movement in this new trend direction. So what is likely to happen is that following the breakout that took place below support, the market appears to be a little bit oversold right now. So what is likely to take place is that it's going to rally a little bit and then form a setup and then provide us with a bearish signal to indicate the continuation of this breakout. So that would be indication to start looking for trading opportunity short as part of this overall bear crown setup that is taking place within the context of what appears to be a large consolidation setup being formed on the daily chart. Now in terms of the US Japanese yen, this one looks as if it could be moving sideways in the short term based on the patterns that I'm seeing taking place on the 4-hour chart. So this could lead to the formation of a consolidation setup, and based on what we're seeing here, you can see that the market is poised for a rally in the short term as part of the formation of what could be a range setup. So I've had these two waves here, bullish wave and a bearish wave. Bullish wave was slightly more aggressive compared to the bearish wave that took its sweet time, and we're now seeing the market rallying quite aggressively at this support point to indicate the possible start of a bullish movement. So what is going to happen, or what needs to happen, is that the market will need to provide a strong indication with strong bull candles to break above this downtrend line and provide us with strong signals and the start of a strong trend to indicate the start of a continued movement bullish. So the break of the trend line is going to be the first indication, and then we will look for an entry setup in the form of a candlestick formation that tells us that the market is going to be breaking higher. Taking a closer look, what could take place is that the market could form an ABC setup, where this would be the A, the B, and the C would be the low point formed at this area here. That would be followed by a strong U-turn that creates this strong bull signal. So it would create a strong bullish signal and then simultaneously breaking this downtrend line to indicate the start of this uptrend. Canadian Japanese yen still appears to be possibly forming a consolidation setup. We recently saw here where the market created this double top formation that led to the break of this uptrend line and the start of this downtrend, which could be part of the formation of an overall consolidation setup on this time frame. So I've had these bearish and bullish waves, and now another trend change taking place here. And if the market continues lower and provides us with a strong bullish signal in this region here, then it will confirm that we're going to be heading towards this area here as part of the formation of this consolidation. Pound New Zealand dollar. This has already formed its consolidation setup on its daily chart. And there are two elements, or there's an element that we refer to as the false breakout reversal that has taken place on the 4-hour chart and is likely to be is a setup that is going to be leading to the formation of the bullish signal that is required on the daily chart to complete its movement back towards its resistance boundary. So here you see the overall consolidation setup on the daily chart. And what has taken place is that the market has recently rallied at this area here, right, to create another support point. And so this has taken us beyond halfway the distance between resistance and support. So it is very likely that this momentum is going to continue and take us towards this resistance boundary. So what is going to be needed is for the market to provide us with a strong bullish signal, perhaps after a brief period of sideways movement or temporary reversal, and that would be then followed by a strong bullish signal to indicate the continuation of the movement towards resistance. Now, as part of the formation of this needed signal, this needed bull signal, what has taken place is that the market has formed this setup on the 4-hour chart in the form of a range, and following a brief breakout below support, the market rallied sharply and took us back inside of the consolidation and eventually broke out above resistance, where it is now hovering just above this boundary. So this false breakout reversal setup on a 4-hour chart, which could lead to a continued movement above this resistance, could be the catalyst or could be the setup that leads to the formation of this bullish signal on the daily chart. So the market may actually form some sort of setup here that will lead to the formation of a bullish signal, and that rally on a 4-hour chart will lead to the formation of a bull signal on the daily chart. So the overall concepts that are controlling this currency pair are movement between consolidation setups that have already been formed, in this case a large setup, a large pennant on the daily chart, and the concept of the false breakout reversal that is taking place on the 4-hour chart that could lead to the bullish signal, the second bullish signal that is needed on the daily chart to continue the movement back to resistance. Pound Japanese yen also forming a consolidation setup, and this is taking place with the formation of with a breakout from a smaller consolidation setup on that same time frame. So it is forming it appears to be forming a fairly large consolidation setup on the weekly chart. We have had this first bullish wave followed by a trend change, and this could take us towards this area here over the long term as it forms a consolidation setup. So what you see here is that the market formed this pennant setup on a weekly chart, and within that setup the market has broken out of a smaller pennant setup that has been formed at the support boundary of this setup here. So in fact, what is taking place is that we're breaking out of two consolidation setups at the same time. This smaller one on the weekly chart and this one on the daily chart. So the breakout is definitely convincing to indicate that we're going to be seeing the Japanese yen gain strength over the long term. And so what is likely to take place is that following this sharp breakout that has taken place here, the market will pull back a little bit and then U-turn to provide us with another signal. Entry at that signal could provide us with a trading gain of about 100 pips over a few days as part of the continued breakout from both this smaller consolidation setup here as well as from this larger consolidation setup. Of course, all of this is going to be taking place within context of the formation of this larger pennant setup. So in summary, the market is providing trading opportunities both in terms of movements within consolidation as well as breakouts from consolidation setups. Many of the pairs have already broken out of these setups and are now waiting on their second signal, their second wave, to continue the breakout. And many of these have actually formed strong signals on their weekly charts. So as you know from the concept in the trading manual, that once a larger time frame has given a signal, the corresponding lower time frame would then follow up after a bit of a lag, and then provide us with a signal to indicate the continuation of the movement in the direction as indicated by the signal on a larger time frame. So in this case, for many of the currency pairs, the weekly chart has provided us with a strong signal, and so over the next few days the daily chart will take its time to respond to that signal and provide a signal of its own to indicate the continuation of the movement in the direction indicated by the weekly chart. Of course, others are still going to be remaining within their consolidation setups, or are in the early stages of forming their consolidations in the short term. So what is going to be needed in both cases, both in terms of breakouts and movements within consolidation, is that we're going to be needing the market to provide us with strong signals that have strong stop loss areas on the 4-hour chart. And once everything is in sync, we then trade to our strong trading target to capture a strong trading gain, either within 24 hours for the short-term movement or over 2 days if we're trying to capture a 100 pip trading gain. So that's it for these currency pairs right now. If you have any questions, you can email me and I'll answer them. And even though this presentation did not have it, the euro pound, which I'll send a picture of it in a while, could actually provide us with a trading opportunity at 5 a.m. Eastern Standard Time, as it shows patterns indicating the possible formation of a consolidation on a 4-hour chart, and the signal that could be given is a bullish ABC signal that could move quite aggressively if the signal is strong enough. So I'm going to be sending the email detailing that possible setup along with this video so that we can prepare for this possible trading opportunity.